Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday, March 23rd edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On this show today, we're going to talk about healthcare stocks, because healthcare will be the story of the day with the vote in the House of Reps today. We'll also have a couple earnings and some ratings changes to discuss as well. Two guests for you today. First up at 8:15 is Phil Davis. He's the founder of Phil's Stock World. And then at 8:35, we're going to have Scott Redler on. He's the chief strategist at T3 Live and T3 Trading Group. Joel, it's a big day for you. You have Michigan in the Sweet 16 later tonight, so I know you're excited. How are we doing in the market this morning?
We are trading up 4.5 handles here. 23.47 is your last print. Caught support right off the open. Double close at 42 and a quarter, 42.75. Low 42 even. So that's the key to the rally. On the upside, we did clear Wednesday's high by only 3 ticks. Got some air if we can get in this 23.50 handle. We'll see if we can do that early in the session. Crude trading up 16 cents here at 48.20. Let's take a look at the daily crude chart. Rally off the lows, kind of giving it back a little bit. Tested that 47 number yesterday. That looks like a huge level to keep an eye on. And gold and silver going opposite directions here. You have gold down $2, flirting with the 12.50 level. Silver up 3 pennies. It's 17.61. Dennis, how you doing on this Thursday morning?
I'm bored.
I know. I usually come in. There's some things to get excited about, but really not much action.
Pretty much crickets out there.
All right.
Yeah.
Well, maybe
not
we'll
a lot
get some fireworks.
happening. Like, we have some individual movers because we had a couple earnings report. We got a lot of upgrades and downgrades here today, but for the most part, this market is sleepy. But you were making a point, Spencer, and this market and the pre-market show, and this market seems to shrug off so much potential bad news. I mean, we have a terrorist attack here, and the market doesn't even sell off on it. Why? What's your thoughts, Joel?
It could have been worse. I mean, I don't know. I mean, we've had a lot of things go on, but it just seems to be the temperament of the market that, we've had things happen, but,
give us a breakdown on the S&P futures. Like, let's break down the last few days of action, because we had a big sell-off for first down day in forever, the first triple-digit down day of over 100 Dow points, and obviously over a 1% fall here in the S&P a couple days ago here. And, so break it down the last few days of trading action here, because we haven't had much follow-through. We had a little bit of follow-through, yesterday at the open, but then they just came in and they started buying them back a little bit yesterday. And, you think when there's, news out there of potential terror attacks, we don't know how this vote's going to go here today. There's lots of things for this market to worry about, but it just doesn't do it. But what are you seeing on the technicals?
Well, I tell you, yesterday, and I should have been pointing this level out off the open, we made a pre-market low yesterday at 32 and a quarter. And that was just only by a buck, under a pair of lows from February 16th and 17th. So call it a triple bottom. Went down there during the regular session, but missed it, only got to 32.75. So that's the line on the sand on the downside. Unless we crack out that 32 and a quarter low, it looks like we're going to get a bounce here, a 50% bounce. And that would take us quite a bit higher. We were basically at 2,400. Call it a 70-point move. 35 and 33 is 68 when I went to school. So, until that 23, yesterday's low is taken out, just looks like another time just to buy the dip.
Talk about Bank of America, because this stock obviously got hit the hardest there on the big sell-off day from 2 days ago, and we went right through the 24 handle and into the 23 handle. We opened weak. So I did get my 2-day move because the 2-day move is all about opening weak, and then obviously what happens after that is a lot of times they say after about 9:30, after the 9:30 open and getting closer towards 10 o'clock, sometimes you find those buy the dippers start to emerge, and it's exactly what did happen in Bank of America. It opened up near the lows, it bounced, and then it kind of just hung out there for most of the day.
Bank of America, similar to the S&Ps, went into actually a better support area than what the S&Ps had, because you had a previous 4 bottoms at the 2250 level, 2248 in January, 2250 in February, and then as late as February 8th, 2245. So you went right into that support area off the big heavy selling off the open. 2245 rebounded. Now, this hasn't shown like it really wants to do a 50% bounce yet, but looks like we're just going to trade around 23 for a while. Went off the board at 22.94, previous close 23. So we'll figure out, is that going to become support or resistance here? Right now, Bank of America trading into green by 21 cents at 23.15.
We're going to jump into the earnings stocks in just a second, but just a quick question from the chat. They're asking about Snap, SNAP. This stock finally got some love from the street yesterday, and I did not see that big of a rally coming, but Drexel Hamilton obviously upgraded the stock to a buy with a price target of $30. And I guess people just wanted an excuse to jump into this issue because they bought it at the open yesterday, and we talk about the open so much, and the stock opened right near the lows yesterday, Joel, and it just ran. Opened around 20, just over 20 and a half, and it ran to 21 and a half in a matter of like 10, 15 minutes. And not only that, it continued on through the entire 21 handle later in the day and got into the 22 handle. Well, it's tacking on another dollar here this morning, 22.85. So momentum traders are in here. I know that Drexel Hamilton analyst was on fast money last night, and I was watching him, and obviously he was pumping the stock again on fast money. So you're seeing some love come into Snap. Valuation, I'm still scared the hell out of this stock here, but it's all about momentum. And this trading, this market is all about momentum. And you get the momentum going in one direction, it can last for a few days.
I want to highlight an article that we had yesterday about observing options activity and what that can tell us about a stock, especially an IPO stock like Snapchat. So there isn't a whole lot to go off of. So we've been watching. I'm going to throw the link into the article in the chat in a second, but we've been watching the early options activity in Snapchat. So far, it's mostly been calls ranging, with strikes ranging from $20 to $22, and expiration dates from tomorrow, ranging from tomorrow to April 21st, which tends to suggest that options traders are betting on the stock going back up above $20 in the next few weeks or so. So that's one thing to keep an eye on, as well as keep an eye on the options.
We're at 22.80 here, so we're well above the $20 psychological hurdle there. We were only under there for a couple of days, and then people started talking about potentially the IPO price. Everybody on CNBC, you can watch, it's great for sentiment indicator there. And when this thing back on March 17th was cutting under $20, everybody was dogging it. Everybody was saying this thing's going back to the IPO price, and it turned around and it held up the next day and it got back up over 20, and that was the key. And then you had a catalyst yesterday with the upgrade from Drexel Hamilton, and that just kick-started it, and it took off and it was gone. So a little pent-up demand, maybe a few shorts getting nervous. They see the upgrade there and they started buying it, and they didn't stop buying it, and they haven't stopped buying it since yesterday morning, up another 4.5%.
You have to use different time frames to get different perspectives on things. And here I got the hourly chart, and that takes us back all the way to the high here. So if you're being super optimistic here about Snap, and you say, 29.44 down to 19, basically a 10-point decline. So you take half of that, 5 at 19 plus 5 equals 24 when I went to school. So that could be a target on the upside, the old 50% retracement. Now, going to the dailies here, I'm looking a little bit shorter term. You do have a trio of 3 highs in Snap, all in the same area. And that area is the 2350 area. So 3 days in a row, 343, 368, 340. If this rally continues, at least on the first time up there to 2350, I expect it to struggle a little bit. Above that, the 50% retracement at the $25 area. Of course, you clear 25. and perhaps going back up to
That
29.
opens up.
Yeah,
I
but
agree here. Again, you can talk a 2-day move here too, and I'm going to just explain the 2-day rule again here, just for newer listeners who haven't, and this is my own thing. But when a stock has a big move one day, and closes, like let's say in the Snap case, we'll use it as the example, has a big up move, which is out of the ordinary from the previous 4 or 5 sessions. You have what people come in there and they look at this and they're like, whoa, this one had a really good day. So they come in the next day. We call them the Johnny come latelys because maybe they have day jobs. They didn't see the trading action until the stock was actually closed. They come in the next day, they go, what happened to that Snap? I want to get into some of that. Call their broker. You even have some Johnny come lately institutions maybe that come, and say, okay, yeah, it's starting to go. I'm going to go here too. And they put the orders in for the next day at the open. So a lot of times the next day, the 2-day rule is that you get a follow through move in the same direction of the big move at the open the next day. So that would be today. And I mean, this would totally work if you would have taken SNAP home last night. You'd already be up 4% here and laughing all the way to the bank on the 2-day move here this morning. After that, though, what happens a lot of times is you get 10, 15 minutes, a little bit of follow through after 9:30, and then usually, and then a lot of times what happens is it starts to give some back. Maybe some profit taking ensues. So this would actually line up pretty well with that. If this stock got up into that whole 23.5 area that you're talking about, just shy of the 50% retracement from the whole previous move, which lines up around $24. I mean, between 23.5, 24, if this stock can start to get up to there at 945, 950, maybe you see some profit taking ensue. And maybe that's your first level, but you got to see how it responds. I mean, it sometimes cuts through these levels like a hot knife through butter. This thing is a wild child. It's already traded 346,000 shares. So whenever you put any trade on, you always have to have a contingency plan. So if I was trading this and this thing started to cut through 24, I'd be nervous if I was short.
all right, and I just want to mention a couple other things here. The volume really tapered off from the opening day of 217 million. It got all the way down. It just kept on dwindling, and then prior to yesterday, the last few sessions, man, we're trading closer to 2 million. So I just think seller's exhaustion. Everyone that had sold this thing got initially smoked. Boom. Less people apt to short it under the $20 area. So you had the volume taper off. Then you had the update on low volume. But yesterday, the volume picked up again. So I just kind of think a little bit of seller's exhaustion, people caught short. And then yesterday, technically too, Dennis, you talk about the opening print. Higher opening print of 20.65. If you chose to go long off the open, you would have taken 13 cents worth of heat. Just filled the gap from yesterday and then off to the races here. So nice technical setup here and Snap from yesterday. Just major resistance to me. I just don't think it's blowing through 23.5, 24 today.
Couple earnings reports just from last night to talk about before we get to our first guest. Can we get them in a minute? We'll go PVH first, which is having a huge pop here. It's helping the retailer stocks a little bit here this morning. Was helping them last night as well. But PVH, I still call it Philip Van Houston. I know they changed their name to PVH Corp. How were their earnings there, Spencer?
Q4 EPS $1.23 versus $1.19. Sales of $2.1 billion versus $2.09 billion. So a pretty good Q4 report as far as guidance goes. They see their fiscal year EPS actually higher than the estimate. The estimate was $7.27. The EPS coming in guidance was $7.30 to $7.40. Q1 EPS came in a little higher as well. They also are adding a $750 million buyback plan.
It's a huge pop, and I'll tell you, you got the pop right after the report, and then it's just been hanging out. So, a lot of times we come in and things are chopping around. When they're up 7%, it's chopping around all over the place, trying to digest the report. This report has been digested here. This thing had its initial pop, and now it traded for the last 3 hours last night, and also for the first 4 hours of the pre-market session here, right in the whole same area, around $97, 97 to 98. So it's kind of found its home. I'll tell you, this could quietly wake up a few of the retailers. They have been looking for an excuse to come into, or they've been looking for an excuse to stop going down. I mean, Kohl's and Macy's and JWN, they've all been getting beats. The pure plays, or the closer pure plays, are looking for sympathy. Ralph Lauren is one to think about. RL, it is bid up in the pre-market, was trading up last night, and VF Corp. Those were the two that I always trade with. VF Corp is bid up as well.
All right, I'll just give you the levels here on the main driver here, and that was PVH. Interesting. Now, you hit 97, 95, and you really haven't backed off yet. But if this is just going to be a great day and we're just going to tack it on and test the whole number of 100, you want to barrel through that 97, 95 very quickly. Just as an example, FedEx yesterday. They got way overdone in the pre-market, hit 199. You never saw that during the regular session. So just something to keep an eye on here. What was the high in the regular session at Federal Express? 197.48. So something to keep an eye on. All right, 8:16. We're running a minute late here.
It's okay. We're going to be right back with Phil Davis of Phil's Stock World.
Phil's World.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we have Phil Davis on the line, founder of Phil's Stock World. Phil, how you doing on this Thursday morning?
Doing great. How you doing?
We're doing well. It was nice to meet you out there at the Traders Expo in New York. Let's move on to the markets here. Now, a little correction from the highs here. Dennis and I have our little indicators to look at to see whether or not this is just a temporary, sell-off, the bull market to continue. I'd like to see a 50% retracement of this move. What do you make of the recent sell-off, and how you looking at the market going forward?
Well, I mean, we need the correction for sure. It's actually good and healthy to have some kind of correction, and this really, frankly, isn't 8 yet. I mean, a little 2.5% sell-off doesn't really cut it as far as corrections go. It would be nice to see 5%, maybe 10%, and then we could consolidate and move forward. That would be a lot more comfortable than if we just suddenly, take a tiny dip and move up again. I do think that's what's going to happen, though. I think we're going to have what we call a weak bounce, which means that less than a 40% retrace. You just talked about 50%. I think we're going to see less than a 40% retrace off the drop. So if we fell from 2,100 to 20,600 on the Dow, that's a 400-point drop. So we'd be looking for basically 80-point bounces. So essentially 20,680 and 20,760 would be the two zones we're going to be looking for. And we don't think that we're going to get to 20,760. So figure 20,750 is the line that we think is going to fail, even if we rally off of what Yellen says this morning and off of the Trump vote tonight. And that failure will then lead to a larger correction.
Let's talk about the vote here tonight. This is obviously going to probably move some of your healthcare stocks. What stocks are you watching ahead of this vote?
Well, we actually picked up a short the other day on Monday morning on IBB, which is the biotech index. And it wasn't so much based on the healthcare vote as it was based on Trump mentioning that he wanted to get back on that thing about getting after the cost of prescription drugs.
Right.
So that's obviously very bad for biotech, since their whole plan is to charge $1,000 a pill. If they can't do that, a lot of their business plans go out the window. So it's good to just do a broad short on the index rather than concentrate on various ones, and that's IBB. We took a put on it. We gained 30% in the first day, but we're still in it because, frankly, I think it can go quite a bit lower. We also, in general, we're just shorting the market, though. I mean, we're still sitting on some hedges. We shorted Netflix, we shorted Tesla, and we've got shorts on the various indexes, especially the Russell and the NASDAQ.
And when you're
We're just
shorting,
thinking-
and this, okay, I got to stop you here because you've got some shorts on here, and obviously we have a lot of traders come on here, and they're scared to short this market because it seems like every time, you think, okay, this market's getting ready to roll over, I'm going to put some shorts on, it just spikes back in your face here. These are some big companies that you're shorting right now. First of all, take us through the setup, like on a stock like Netflix. When you're shorting this, like, where is your contingency plan if it does spike back in your face?
Okay, now Netflix this is different. We have Tesla, Amazon, and Netflix as shorts. With Tesla and Amazon, we have a spread which is fairly aggressive because we really don't think that there's any chance that they're going to go higher than they are now. With Netflix, on the other hand, that's a scary one to short, and we're better off doing like a put there. Now, see, if you buy a put, you're limiting your downside exposure. So you're paying premium, which we hate to pay premium, but in the case of something like Netflix, I'd rather limit my risk than try to get fancy with a trade. But the interesting thing that people don't understand about puts, though, is you don't have to be Netflix. If I buy, like, let's say the June 130 put, which is $4 on Netflix, okay? I don't need Netflix to drop. Netflix is at 142 now. I don't need Netflix to hit 130 because I have until June, and any move down between now and June is going to then increase the value of the put, regardless.
Right.
So if I buy that put for $4, the delta on that put is roughly about 25 cents, and that means for each dollar Netflix drops, that put will gain 25 cents. So if I get a $4 drop in Netflix, I will gain 25% on my put. And that's good money. That's only, because it's $4 in Netflix is only like a 3% drop. So
what
3%. Yeah, go ahead.
Yeah, I was going to say, what are you seeing in the Netflix chart that makes you bearish it? I'm just looking at it here. Was it the big candle? Yeah.
I'm not a chart guy. I'm the opposite of a chart guy. I think chart people are
excellent.
Insane. But what I see fundamentally is that Netflix, aside from having a completely ridiculous PE ratio, Netflix is only bouncing. Well, if you want to talk chart, Netflix is only moving up at all in the last day. Frankly, it wasn't even long. In the last day, the only reason Netflix bounced off 140 is because 140 happens to be their 50-day moving average, and that let it bounce very, very slightly. It fell from like 146, 147 to 140, and it's bouncing a tiny bit right now. Again, we're expecting a fairly weak bounce off of that, and then it's going to plunge back and fall below the 50-day moving average. So that's your technical on it. But the reason is, look, if you look at Time Warner, everyone has HBO, right? It's like it's not a thing. Like if you have cable, if you're watching TV, you have HBO basically. And they've been in the market forever. So they've penetrated the planet Earth.
Yep.
Okay, Netflix isn't going to get more people than Time Warner. No matter how many years you give them, that's basically what you would call the saturation point for the human TV watching crowd. Time Warner makes quite a bit more money than Netflix, but the thing is that their valuation, because they're a company that produces TV shows and buys TV shows, and does everything Netflix does essentially, but their PE is 20. So Time Warner makes $4 billion a year, and their valuation is $75 billion, not even 20 times what they earn. Whereas Netflix, I'm looking this up, but this is the stupidest thing anyway. Netflix makes $200 million. They have slightly worse margins, and their valuation is $61 billion.
Yeah.
So their value is the same as Time Warner with 1/50th the earnings.
Phil, I get that argument. I totally get that argument. And I've actually been trying to make that argument for a while on Netflix as well. I've hated the stock since $100, and it's at 140. So why do you think now this time is different? Because the market hasn't been listening to, the multiple here on stock like Netflix or even Tesla here for the longest period of time. Why do you think now is the time to try it on the short side? Because
I think now because basically you're looking at the 150 line, and that's up 50% since the election.
Okay.
And that's a point at which even technical people go, oh, wait a minute, why is it up 50%? At some point, the rational part of people's brains kicks in and they start going, why am I paying 50% more than this thing was valued 4 months ago?
Right.
What happened to this stock? What improved? Nothing improved. And when you look at the earnings that are coming out shortly, you'll see nothing improved. In fact, the November earnings caused quite a drop. It caused a $20 drop in Netflix on the November earnings. The January earnings, everybody's in a more forgiving mood, and they sort of flatlined out from 140, and they're still about 142 right now. So they haven't gone anywhere since the January earnings. All they need to do is not have great earnings on the next period, and they are going to drop significantly.
All right, you said that you were more convinced, more comfortable with the Tesla short, and I think when I talked to you at the Traders Expo, you had pulled a short off in that one, and you're back at it again here.
This is our second short. The first one we made 350%.
Nice.
So we consider that a good win. that was one from the Traders Expo, and the next one we did was we re-upped it on Monday. We started a new short because the first one expired on Friday. And
you said you did a spread. Tell us about the spread you did in this one. Did you sell some call spread?
One we have now.
Yes.
Yeah. Okay. The way we did it now, very, very aggressive. Okay. I just want to make sure people understand this. But the spread is we sold 3 Tesla April 265 calls for $9.
Oh, jeez. That's expensive.
That gave us $2,700 in our pocket. We take that money and we bought 5 April 290 puts for $30. And then we sold 5 Tesla April 275 puts for $19. So basically it's 5 April 290, 275 bear put spreads. So we buy the 290 puts, sell the 275 puts. Those net $11. And we sold, not as many, but we sold the April 265 calls for $9. So the net on the spread overall was $3,300 on the spread. The upside of the spread, though, is $7,500 if it all goes well. And that's in 30 days. We can make 127%. So all Tesla has to do is be below 265, and we make 127%.
And how are the liquidity in those options? How far did you go out? Did you just stick those orders out there as spreads and say?
Oh, they're super liquid. You can get them. I mean, they trigger almost right away. I mean, because things like Tesla are just constantly moving. There's always action on the stocks. We take that into account with our trades. Like we don't play illiquid stocks for the short. Certainly not for the short term. Sometimes for the long term, a dividend stock or something like that that's not very liquid, we might go fishing and go play it. But for something like this, you want to be able to get in and get out. So we play the more liquid things, and Tesla is very liquid.
And
there's constant action.
And now, before we let you go, you said Amazon. Was that the last one you were picking on?
Amazon too, yeah.
Looks like 840's key here. What are you seeing in Amazon, or what are you doing?
Oh, you want that spread also? All right, hang on a second. I got to look that one up. Oh, I know where to find it. Hang on.
Right on your position screen, Phil.
Sorry, yeah, I got to flip to my other portfolio because we keep our shorts like this in a special portfolio because they're scary.
The no luck portfolio. I have one of those too. One that you try not to look at because if it's sitting in front of you, like like looking at that, I don't like taking the heat.
That's true, because positions like this will go up and down thousands of dollars in a second on you.
Yeah.
So you just have to leave it and see how it's doing at the end of the day, not like stare at it.
That's what I need to do, Phil.
Now Amazon is at right at 850. This trade is actually still perfectly doable. Amazon's at 850. We sold the April 850 calls, 2 of them, for $18.20. This was on Monday also. This was also a Monday trade. And and then we took the $880 puts. Now remember, Amazon's at 850. So we're buying a spread that's in the money already. All we're doing is drawing a line at 850 and saying no higher. So then we take 3 Amazon April 880 puts. Those were $28. And we sell 3 3 850 puts right on the money, and those were 1125. So our net on that one was I don't have the math in front of me. Sorry.
That's all right.
Our net on that one is practically zero, though. I mean, we sold 7,000. It's about $1,400. And again, if that one pays off, that's a $15,000 payoff. So it's a 10-bagger if it works.
Using the house's money. Using the house's money. I said you're using the house's money by selling those expensive options. And
that's their whole strategy.
Yep. It's a good strategy, too. All right, Phil, we'll let you go. Phil Davis, founder of Phil's Stock World, giving us some of his secret strategies. Thanks a lot, Phil. We'll talk to you again soon.
Yeah, we'll follow up in April. Have a good day.
All right, S&P's creeping higher, 47.25, up 475. Dennis, I mean, a little bit different than Nick's style, right? I mean, he is, he's selling.
A little more aggressive.
More aggressive. Yeah.
Yeah, Nick's all about, writing and looking at, way out of the money options and writing something that he thinks will never happen. So he's basically writing lottery tickets to the market all the time. This is making calls. He's making a call here on Tesla, Amazon, Netflix. The valuation is obviously just too extreme here now. And maybe now is the time where the market's going to start to, get some rationality to it and take them back in. And that might happen. The only trouble is, the timing on these things. Like I'll tell you, the market does become rational at some point. But, and I look at stocks like Netflix, Tesla, and Amazon, and I argue the same thing. And the multiples keep me out of that. Although Amazon, we know the multiple looks a little bit, bad because they keep so much in reinvesting in the company. So a little bit different story maybe with Amazon. But at the same time, valuation is scary for these things. That's why I don't own them in my invest portfolio. But it's difficult to short these things as well, just because, like we say, the market can stay irrational much longer than it can stay solvent. So you have to be very careful with the way you trade these things. And Phil knows what he's doing, though. He's been in business a long time. He knows how to get out of those if they start to work against him. And that's always the key. I always say you can put any trade on as long as you have an out.
The Tesla here, we went from 287 down to 242. So what's that? That's a 45-point move. 22.5. That takes you up to the 264.5, 265.
Right where we failed.
Yeah. Look at that. And then, I know the numbers aren't exact because 575, 533, 455, and 480. Call that a quad top, and at Tesla there. 4 days in a row, you made a high within $1. So nice looking positions there from Phil. 8:32, Dennis, we started to do some earnings. You want to do a few more before we bring on Red Dog?
The other one of note from last night, I would say, is Five Below, FIVE. That stock's getting a big lift here as well. The $5 store. Maybe we should come up with a $4 store, and we'll just be rich, Joel. But the $5 store is actually getting a nice lift. It's up 7% here in the pre-market. I'll tell you, though, this thing has been range-bound. You look at the chart here for the last 2 months. This thing has been range-bound between 38 and 41 forever. We now move from the lower end of the range to the upper end of the range in one trading session here. So I don't know. I see a lot of overhead supply up here, and I just don't think I can chase it. I know sometimes you get follow through on these moves, but coupled with the nervousness in the market overall, in the last couple of days here, I think I'd be ringing the register if it was popping up there if I had shares.
Yeah, I'm not going to battle you on this one. You did have the trading range, all those highs, just under 40.50. Currently trading above that, your pre-market high of 41.50. That's right in the area of a high you had at a little bit below 41.92. Once again, you want to see follow through. If this thing's just going to keep going, 41.50, 41.75, 42, you really don't want to see it fall back under all those highs at the 40.50 area.
Just one ratings change to talk about before we get to Scott. FireEye, FEYE. This is one of the biggest moves I've seen in a long time from Goldman. They go from sell to buy on FEYE.
That's
so
crazy.
Going through the whole thing, they were at a sell rating on the thing, and they're going to buy here now. Stock is trading up almost 7% here in the pre-market. If we look at FEYE just on the charts, actually it's up 8% here now, trading at $12.45 here on 317,000 shares. It's a big move from Goldman.
Yeah, it's a big move, and man, it's tough. Pre-market high, 12.54. That's one level I could give you. And then you're just getting into this whole gap zone. You have a gap between 12 and 13. So if this party's really going to get going here, Let's go up to that 13. I think that's going to be big resistance the first time. If you feel like you missed out on it, well, maybe you'll have to wait till a pull back to the $12 area. That was your area of resistance, I believe, since earnings and for the whole month of February. So perhaps old support, old resistance will be new support here in FireEye. I know this has been a favorite of Sean Udall's for a long time, so I'm sure he's happy Goldman did the flip there. All right, Spencer, 8:35. You want to take another break?
I do. Let's go grab Scott Redler, Chief Strategist at T3 Live and the T3 Trading Group.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We are joined by Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. Scott, how you doing today?
I'm doing great. How's it going over there?
Good, good. Dennis and I had the pleasure of checking out the T3 office in New York City. We had a lot of fun, a lot of great guys there. So say hello to all the boys. But Scott finally had a correction in the market here and getting a little bit of recovery. Tell us how you looked at the S&Ps and what sectors you dipped your toe in here on the potential rebound.
Okay, well, we did see a few little warning signs adding up in the past week or so. We saw a little bit of momentum lost in the small caps, a little bit of failure at oil at 53. All of a sudden, when the Fed on Wednesday was a little bit more dovish than hawkish, the banks started to lose some levels. So, all in all, we were kind of prone for a bit of a, shake the tree. So on Tuesday, I outlined 2369 in the S&P cash. That was where the 8 and 21-day moving average was, and basically we sliced through that and broke what I call the accelerated trend. Now you have a few different trends, and different people play different ones based on their time frame. For me, I'm an active trader for cash flow. I like to trade what's moving, what's directional. So when you're in a strong trend above the 8 and 21-day, you try and be long. When it breaks, you get out of the way, you figure out what's next, because you never know how deep a corrective phase can go. So with that said, yesterday, you guys know I love the red dog reversal. Well, yesterday we had a little price discovery. S&P cash went below 2341 and then reclaimed it. So I did buy the spiders yesterday. And I'm kind of thinking maybe we try and get a retest of this broken accelerated trend up towards, 2360 to 2363. And that's when I think you really have to reevaluate what's going on here. If the bears want to make a stand for lower prices, that's where they reject it and turn it lower. If all of a sudden we kind of stop there, go sideways and go again, then, that could have been it. You're hearing a lot of opinions on whether we're going to be down 5, 10, 15, 20% in the next few months, or that was it. The market will tell us what's next by the way we bounce off of yesterday's lows.
Scott, jump into a stock like Bank America here, because this stock, obviously didn't respond that well after we had the actual Fed rate hike. It started to leak, and it leaked for a couple of days, and then obviously just 2 days ago we had the whoosh, where we just went in from 25 basically down to 23. Almost seemed like overnight. We get down low. We opened weak yesterday, 2250, but then a nice little green candle actually there. So how are you analyzing this now going forward on a stock like BAC?
Well, I think it's going to be very interesting moving forward. I actually did a segment yesterday on Fast Money about the banks, basically saying the same thing, how the accelerated trend that was intact since post-election just got changed. Doesn't mean the macro trend is over or the intermediate trend, but the trade changed. So like you said, after Fed Day, it didn't act well, so put it on alert. Then it broke the 8 and 21 day and that accelerated trend somewhere around 25.20. So if you're a trader and you got out there, or maybe even got short there, coming into the 22s, which you could see as support all the way back from mid-November, throughout the year, it was worth a try. So yesterday I actually, in the red, I started buying it. And I actually was anticipating it. I figured I didn't do it the day before when most people got hurt. So I thought the risk reward was good. So I bought it, and then it tried to reclaim the prior day low, which was 22.95. I bought a little bit more, trimmed some, held some, and now I have some into today, and we'll see. I think Janet Yellen speaking at 8:45. Maybe we get the healthcare go through. I'm thinking that we're going to bounce back to the 50-day, which is around 23.70, 23.80. If it can't bounce there, then the banks are in trouble. But I think that we get some type of bounce to there, and then at that point, I'd probably get rid of some, or maybe if not all of it, and then wait and see what's next. I also said if the trade is more than just bent and it's broken, then it gets there, rolls down, builds a right shoulder, and then all of a sudden this 22 area down the road breaks, and then that would mean broader, lower, implications for the overall S&P cash in the markets. So I would be watching these banks to see what type of bounce they have and whether those moving averages get reclaimed or rejected.
Scott, you made
Joel,
it.
the old mute trick on you, Joel. You didn't. Joel does it every show, Scott. He's always on. He starts talking, and then he's like, "Oops, I'm on mute." And you got to throw another quarter into the quarter, Jared.
He did it every show except for the show that I bet he wouldn't. I bet he would, and he did. And I lost a lunch on that.
Okay, all right. So you made the comment. Let's go into the spiders here. That you took out the previous day's low. So you were looking for the red dog reversal, right? Now, here is the $1 million question, and it's probably the thing that I've struggled with in my trading for the longest. What's your timing? I mean, how do you define? Are you on a 5-minute? Yesterday's, the 2-day low was 33.58. You went down to 33.05. Obviously, you came back. How do you quantify that? What is the time frame you're looking at to say, okay, this is a red dog reversal. We are holding that low to qualify the trade?
Well, first of all, sometimes it tests that pivot a few times during the course of the day before you actually get the conviction that it establishes it. But the pivot is the prior day low. So your pivot that we're talking about is 233.58. Yep. That was Tuesday's low. So in order for, just say the market to go down again, for another big day, what does it have to do? It has to go below that pivot and stay below that pivot to maybe get to the 50-day, because that's what a lot of people thought would happen. Instead, it went below it. So if you were pressing it short, thinking it would get to the 50-day, and then all of a sudden it doesn't get to the 50-day, comes back above it, and you're short, you're like, oh, I got to cover there because we just came in from, 240, 238, and, the prior day's break. That's why it's such a good action area. Then you have the people who might have sold on Tuesday break saying, hey, you know what, I want to buy something calculated. So we reclaim 233.58, maybe some shorts cover, and then at least we have now 233.05, yesterday's low, to use as your point of reference. So it usually creates an actionable trade because dip buyers want to get in at that pivot. Shorts need to cover, so you get a quick pop. I think yesterday when it happened, it went like 70 cents. So what I would do sometimes is I'll sell some there, hold half, and then let the rest of the day play out with the stop at the day's low. And then I hold a bit into today like I have, did for today. And then now I'll figure out, can we get above yesterday's high and trade towards 235, 235.50, where some resistance might come in. I might just exit the trade there. Could have been a day and a half trade, or sometimes someone will put a stop in yesterday's low, and all of a sudden that could be the pivot low, and there are some bulls out there saying that was it and we're going to be at highs in the next month. So at least during a price discovery phase, you get that point of reference versus trying to catch a falling knife. And then around that pivot, sometimes it's a great action area because that's the grudge match between the bulls and the bears. And then you take some off and you hold some.
Scott, we only got about a minute left with you. I just want to ask you about some of the tech stocks, because I really noticed the bounce was very pronounced in some of these tech stocks yesterday. And a lot of these stocks actually matched the lows from the previous day. A stock like Apple, previous day low was 139.73, opened right down there near that low, 139.76, and caught a bit again. Microsoft, same story. Got, beat up pretty hard on the big fall from 2 days ago. Low 64.13, opens the next day at 64.12, pretty much right at that low on the butt, and then bounces a buck here. Intel, a lot of the same story in all of these tech stocks where they opened up and kind of matched the prior day low and got a big bounce and got a lot of the losses back. What do you see for the tech stocks going forward?
Well, tech stocks are acting the best. Bears are not going to be able to growl too loud if all of a sudden you can't get, a move below a prior day's low in Apple. Apple's been holding the 8-day moving average the entire time. If yesterday it opened down and stayed down and went, down a few dollars, maybe, we'd have more weakness. But if the buyers keep coming back in tech, the downside should be muted in the overall indices. What you want to do is you want to judge the type of bounce after a big down day. If it takes only back a third, it shows you that down day is in control. If it takes back half, not so much in control. If it takes back at all, it means nothing. So like you said, Apple, Microsoft, Intel acted well, and I also think NVIDIA acted pretty well. Look at NVIDIA. NVIDIA almost took all of that back and has a nice little bull flag, so that's on my radar to maybe take out 110 in the next few sessions ahead. So I think tech is acting very well, and if it continues, it's going to be hard for the markets to go a lot lower. So I was trying to see if tech would play catch-up to the downside yesterday, and it didn't. So as long as it stays up, I think it's a great thing to focus on.
Scott, Red Dog Redler, Chief Strategist at T3 Live and T3 Trading Group. Scott, I think we got to start getting you back on once a week again. Are Thursdays okay for you, or Fridays? We'll have to talk about that because you really give some great input, great areas to look at. So we'll be in touch later. Certainly like to have you on once a week.
I'm going to have to give you my agent's phone number because I'm not sure if I'm available. I'm kidding.
All right, pal.
We'll definitely. I would love to come back on, and we'll figure out a more consistent date so we can continue to connect the dots, because I love to be consistent and have and set the table for those who listen.
Okay, and you do get free swim lessons with that.
Maybe running, no swim lessons. I like to trail run now with my dog. I'm doing a little less swimming.
Okay, all right. Thanks a lot. We'll talk to you soon. Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. Dennis, I just got an education there, and I think it's a way, how I like to use my levels and stuff. I think it gives you a reference point. If you were still focusing on that 33.58 in the spider yesterday, okay, well, it went to 33.05. But if you kept that as a reference point for the entire day, I mean, maybe you didn't get long, but at least you wanted to stay short once that level held.
I mean, once you start cutting through the previous day's low, like when you open it's a bogey for me too, and it's something that I look at. Bank America is an example of it, just barely got above it. But, especially when you get these stocks that don't, violate the previous day's low. Here's, an open where a lot of stocks are getting killed, and you have Apple, Microsoft that don't even violate the previous day's low. And then, I liked what Scott said about, getting a third of it back. Okay, well, the Bears are in control, get half it back and get the whole thing back. Like in the case of Microsoft, obviously the Bears are in no control there at all. So, it's all about, reference points. It's all about having outs. We talk about the close, we talk about the open always being big points because there's a lot of traders that will be in at those prices, either long or short. So that's why those are big reference points. And the closes, there's a lot of institutional money trading on the closing print. Institutions, I have my buddy at BlackRock, telling me that institutions are doing everything on the close because, they move, they come in during the day, and obviously, they're trading with a lot of other high frequency traders during the middle of the day. They're trading with more toxic flow. It's difficult for them to get in and out, but they know when they come at the end of the day and they're doing, their LOC orders or their MOC orders, which are the limit on close, which we talk about in the market on close, they know other institutions are going to be there. So they know that there's some volume. They know they'll be able to get out of a big piece of stock without much price impact. And when you have, big volume going off at the close, it becomes a big reference point there just because there's so many other smaller traders too that will be in or out from that point. And like you say, that's the mark. So, that's what people are looking at. That's what people are talking about. So that's why, the close is a very important level. And I look at a stock like Microsoft yesterday, and the close, 64.70, or the close rate down 64.93, and the low of the day 64.72, and we didn't even violate that low, going as low as 64.12, I guess 64.12, 64.13. But, when they can match up those two lows, I'd be scared to be short if you're not going down and violating those lows.
Just talking about the Microsoft on, let's see, today's Thursday. On Tuesday, when the market was falling out of bed here, and I'm looking, and this thing was only down 25 or 30 cents. And I'm like, man, this thing's just got to go with the market, And I'm like, well, then I did the old theory. Well, if it's not going down in this kind of market, what happens if we get some kind of rally? And I think this was like around the 64.50 area. And I said, you know what? This is acted too strong. So I laid off it. It might have been a good short-term trade, if I would have had the wherewithal to cover when it went to 64. But overall, man, that thing was strong. It was strong in a weak market. Then you got a rebound yesterday. And what did the stock? Did it add a stick yesterday? Pretty much. I mean, it had a good day. And once again, Dennis, you talk about a double bottom there. It gained a little over 80 cents, 82 cents. Not only was that a double bottom, Dennis, but it was a triple and it was a quad bottom because you had a low at 64.15. It violated that by a couple points. And then you had a couple ticks and you had another low at 64.19. So go left on the chart and give you an indication maybe what's going to happen on the right.
Let's jump in and take a look at the opening imbalances here. Couple of note here this morning. I can see Nike's got a big buy imbalance, 204,000 shares. Maybe some people are looking to, fish for the bottom here because obviously this thing got killed on its earnings report there yesterday. General Electric, 103,000 to buy. Actually, it's pretty much a lot of smaller buy imbalances, but pretty much across the board. Bank of America, 176,000 to buy here. McDonald's, which is one we don't talk about a lot, 40,000 to buy. What's interesting on Mickey D's is he's set up kind of well here because Mickey D's has a huge seller at the point. And we talk, about orders in the book and looking at different McDonald's here. This 130 level is absolutely enormous. And, a technician will look and say, they can look at the chart and say, oh, this 130 looks big. And it does. Well, order flow is often the reason sometimes when you have these technical setups where, you're seeing, the price get right up there on the button. And the whole reason is if there's 100,000 to sell, which there is on McDonald's on 130, it takes some big money to take that seller out. So it gets up there and it acts like a temporary roadblock. And it's tried 2 or 3 times in the past. So here we are, we're 129.10. If it drifts up there again, 130 remains resistance until that order gets taken out. And when that order gets taken out, then the stock could potentially be in breakout mode. But a lot of times, when you're talking technically, it's order flow that makes up the technicals.
All right, and coming here, you can see the 130 there sticking out on the chart. I'm not sure what size order, but if it gets up there, take a look in your book. Here's an interesting chart here. Wynn Resorts. Now, we had a rumor last week that Las Vegas Sands was going after it. That was not confirmed by the company. Now you got a couple odd lots trading here above 114. That is the area I am keeping an eye on today for a bona fide breakout. Another breakout to the upside. Look at the last 3 highs, 385, 395, and then yesterday's was a little bit lower at 1352. Yesterday was a light volume day on the rally, but man, you just got to have major significance here. That 114 area will lead to another breakout here in Wynn Resorts. Dennis, any comments on WY?
It's got the momentum. The one thing just of caution with Wynn, obviously Las Vegas Sands and MGM really haven't participated. MGM is off significantly the last few days, Las Vegas Sands. So maybe with some rumors, maybe with some other stuff kick-starting the Wynn. That's the only word of caution is that it is a little bit overextended. I mean, it's been a hell of a run. We were $100 2 weeks ago. Now we're trading up here at 114. So, it breaks out. A breakout's a breakout. Just remember always to have a tight stop there because if they do start to reverse, sometimes they can give some back. So, if I'm playing this for a breakout over the couple of highs there from the previous day, and I think you're lining them up there just under 114, gets above 114 and starts going 114 and a half, 115, that's all good. Starts cutting back through 114, that's where I get nervous. You want the breakout to really be a breakout. You don't want it to be a fake out. So, and a fake out would be fine if it gets up over 114, but then starts trading actively back in the 113s pretty fast.
Yeah, that has had a nice move up since, just was $100, just a couple, not even at the beginning of
It's
March.
a big move for the stock, a little bit uncharacteristic, and, maybe that has to do with rumors there. That's why, just a word of caution. I always say, for me, I like, the consolidation period to put my trade on and then let it go. I don't like to jump on the train when it's already left the station. I kind of feel like Wynn left the station 2 weeks ago here, and you're kind of jumping on a moving train now. I mean, you can do that, and you can successfully sometimes get on the train and move pretty quickly. But, if all of a sudden, you miss, your timing is bad, you don't want to fall under the tracks and get run over.
All right. Should we do a little Twitter update here, Dennis? I haven't even been looking at this thing.
Got the beats. Nice candle yesterday. So I don't know if that's a full red dog reversal, but definitely a reversal day there yesterday. We got down obviously to 1432, and buyers came in. Buyers came into the stock, and you know how I love my 2-day move. I'd say it's the first big candle. If you could get up above 15,
Yeah.
I think there could be a little bit of air. I think you shook out a lot of people who, even me. I was trying to say, well, maybe this 15 is going to hold, and it obviously didn't. And you had the ugly candle there from when everything got sold off 2 days ago. But it was a good bounce back day for Twitter yesterday. So, it gets back above 15. You can see a little bit more momentum here. Again, long-term valuation just scares the hell out of me on Twitter.
Pair of highs 15.10 and 15.11. Yesterday's high 14.99. So we'll keep an eye on that one for a potential rally. S&P's starting to leak a little bit here. It's only up $3. Got to remember, 48.75 was Wednesday's high. So far, the current high is 49.50. You have Auntie Jeanette speaking now or relatively soon. So if you get some unexpected dips or rallies in the market, you can attribute that to her.
Accenture earnings is one that we missed from this morning. ACN is trading down about 3% in the pre-market. Everybody was buying this thing ahead of the report there yesterday. Stock got up and closed right near its high of the day, high of the move, high of the year, high all-time high is where it closed there yesterday. Giving some back here this morning. Spencer, tell us the details on the report, and then Joel break down the technicals.
Well, the Q2 EPS beat by 3 cents, $1.33 versus $1.30. The sales missed a little bit, 8.32 bill versus 8.34 bill. They do see Q3 sales coming in line with the estimate, and they raised the bottom end of their fiscal year 17 EPS guidance.
Nothing too bad there, but again, it's just a matter of, everything's been going right for this company, and they probably need to blow it away, especially in a market that's a little more nervous than it was a week ago, for the stock to go higher. People looking for an excuse to take some profits in this, and they got that excuse. Joel? You didn't do the mute trick again, did you?
Well, you always tell. Yes, I did. 122.30. That is your pre-market low. Looking on the daily charts here, you have a couple lows right in this area on the daily. So I think you need to open up, hold that pre-market low, and then just keep going up, because I don't like losing this 122.50 level. Maybe another stopping point at 122 even, but opening into really an area that it needs to hold.
We got to just quickly talk the other upgrades and downgrades, because there was a few here of note today. We already mentioned FireEye. That was the big one of the day, which is getting the big boost from Goldman Sachs. Goldman also downgraded Proofpoint, PFPT. They're downgrading that to sell. That stock is trading down 2% in the pre-market. And they are Credit Suisse. They're putting, looks like, a pair trade on. They are downgrading Dollar General, and they are upgrading Dollar Tree. So those two stocks going in opposite directions today, thanks to Credit Suisse. Joe, we haven't talked about these dollar stores, and we know we had the Five Below earnings here, but talk Dollar Tree and Dollar General here as Credit Suisse is upgrading one and downgrading the other.
You know me, I trade everything in the same direction, so this is nothing but confusion to me when they're going one way with one and the other way. I mean, Dollar Tree, was that the recipient of the upgrade or the downgrade?
The DLTR is the upgrade. Dollar General is the downgrade.
Okay, DLTR, you have it out here. Low at 72.55 in November. Kissed that area in the last two sessions. So holding there, they got good risk reward going back up, but below 72.55, you need to cut out. Wow, look at that little string of up days it had back in November. That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Whew! Broke the 8-day rule by 2 days. And then Dollar General, DG. Let's see what we can find here. Needs to hold 70. I mean, this is ugly. So, couple big levels, not big opinions on the dollar stores. All right.
Kroger upgraded at RBC.
Okay.
MO downgraded at RBC. Stock getting beats here this morning. RARE, which is rare. It's getting downgraded at Piper Jaffray here this morning.
Ooh.
So that's one that's getting the beats. Yeah, they're pulling the rug out from underneath. This one's down 7%.
And, wow, someone had the memo on this one. Look at what happened to this thing on Tuesday.
I think it's a follow-through downgrade from that.
Wow. Okay. All right. Some good stocks to look at. 859. Spencer, you want to preview the final show of the
Looking ahead to tomorrow, we have two guests for you. Scott Rosen, the CEO of Visible Alpha. He's a former sell-side analyst who then went on to start his own fintech company. And then at 8:35, we're going to have Jonathan Corpina from the floor of the NYSE. He is the senior managing partner at Meridian Equity Partners. So that's our show for Friday. This has been our show for Thursday. Hope you enjoyed it and our chats with Phil and Scott. Hope we answered your questions. If we didn't, well, try us again tomorrow, same time, same place. Please remember that all of the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Have a good rest of your Thursday. We'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.